Okay. Hi everyone. I've got a different trade for you, and which is called as the Fed trade. Uh, it is difficult to think, but even Federal Reserve in the US, who is our central bank in the United States, gives opportunities to traders at least a few times a year when they are having a meeting, right? So I have picked up one of the trade for March. I think on March 22nd, we had the Fed meeting. Now I am on ThinkOrSim platform, and as you can see, it is my virtual account. I have reset the date to March 22nd, approximately at 14:30, like the 2:30 p.m. in the afternoon. That's the time when our Fed chair, Mr. Powell, starts speaking. So the idea is what happens during the Fed minutes, or when the Fed chair speaks, all the uh, traders are looking for how the market will move, right? And when the Fed chair has press conference and when he starts speaking, there are a lot of questions being asked in that meeting. So even if Mr. Chair replies to some of the questions and maybe provide some detailed information on what questions he is being asked to, all that information is not very clear until the Fed minutes are out, right? And most of the times, the Fed has been aggressive in raising rates because all of us know interest rate hikes matter to Fed. He wants to get the inflation rate down, and that's the reason he has been consecutively raising interest rates since last 18 months or so. And that's what the markets don't like, because when interest rate increases, it makes everything expensive. It makes borrowing money from the bank expensive. Companies who might want to start their business, existing companies who might to borrow from banks, might not be doing so because of increasing interest rates. Right? So it somehow reduces the economic activity in the market, or in the economy, and that's what pressurizes the inflation to go down, right? So that is not good for the market, but good for the economy in Fed's terms, right? So the idea is, the day when the Mr. Chair speaks, and it is all these meetings are usually scheduled on Wednesdays afternoons around 2 p.m. or 2:30 p.m. He starts giving more details to everyone on what the interest rate hike decision is and how it will impact the markets, right? So I have set the time accordingly to 2:33. If you see, what we will be observing is, the day when Mr. Chair speaks and the market rises, it makes new highs. Maybe because the information is not very clear, maybe there are some traders who want to speculate and make some quick bucks, right? So, in my opinion, and whatever analysis I have done for the last few instances where we had the Fed chair meeting when he's speaking, and on the Wednesday when he's speaking in the afternoon, whatever information he gives, the market will, irrespective of whatever the decision is, whatever he is informing to all of us with respect to the interest rate hikes, the market will tend to rise high on that day, and it happens around 2 2:30 to 3 p.m. when the market will, uh, without any reason, illogically start rising higher, right? And that's what I'm waiting for. If you see, the date is set to March 22nd for this year, and Mr. Chair wants to speak. I'm just simulating the situation where the market goes up. I want to buy some puts, right? So the trend that I have seen is, on the day when he speaks, we can buy puts around 2:30 to 3 p.m. whenever the market starts making new highs. And we can do puts for a week out, 2 week out, or 4 weeks out. But I usually take it for the next day, or that week expiry, like on the Friday week expiry, the week in which he is having a meeting, right? Because it could be risky trade, but we can probably speculate and put in a few bucks to make a huge profit, right? So I'm going to take puts for Friday. I'm just waiting for the market to go up and make new highs. Uh, Maybe I can reset the time quickly, so we don't have to wait on the video. Yeah, if you see, it has started rising around 2:45 p.m., right? So what I'm going to do is, for the week of I'll go 2 days out for March 24th, and I will buy a put which is at the money. Say we can do this. Let's say we buy 5 puts for at the money 2 days after that, and okay, that order is done. In case if you think, yeah, 3,000 bucks is too much risk for us to take, we could also do put spreads. So, or you could do credit spreads like bear calls. Like you can sell the calls which are at the money. You can do a bearish strategy using that. Now, or you can do a vertical put spread where you want to sell 40-40, and yeah, you can do 10 of those. So then here the risk is less compared to what we were considering, right? If you see, okay, it is not going to make money because, oh yeah, that's fine. I mean, we can make 40 bucks here. If okay, both the orders are filled, and let's see how the market behaves. I can move this forward just to check what happened at the end of the day, on that day when Mr. Chair spoke, because in my opinion, maybe the market might be trending up that day, but it will go down for the next 2 days. So let's see if I move the time forward. If you can see, yeah, okay, it trended down the same day. Okay, let's go back and check how much profit we made. If you know, on an investment of, let's go and check 15. Okay, so I got 10 contracts at 15 bucks each. Not this one. So if you look at single orders, this is not what I did. Okay, yeah, 3,000. So I got the contract for 3,000 each, right? If you know, I had bought 40 put. Yeah, this is what I had bought. So that 3,800, the trade price. So I got into this contract for 3,875 bucks each one of them, and then it is turned to 100, which means that your $3,800 turned to 10,000 approximately, and you can see the total profit that we have earned, 26,000. Now, remember the expiry date was the Friday and not the next day. So let me go and check how much profit we did, assuming we hold the position through Friday of that week. Probably the market significantly dropped after that. Let's see. So I'm moving the time ahead as of 16, like the 4 p.m. Eastern time on March 24th to see what the market did and how much profit we generated. Okay. So if you see here, comes back to 13,000. So ideally it is good if we can close the order the next day as soon as we are in profit, but still we made some profit on this trade. So that is the trade that I wanted to share with you. I'll keep sharing more trading strategies. Thank you so much everyone for listening to me. Subscribe if you like the channel, and let's continue learning. Thanks.